Hello, everyone. I'm Eric from Summit Metals. We're really excited today. We have a very special guest, one who's been on our program before, who adds amazing insight relative to the markets, whether gold or silver, and now even platinum. And we're really excited to have him here. Please join me in welcoming Bald Guy Money to the channel.
Hello, everyone. Thanks, Eric, for having me back on the Summit Metals channel. I love these conversations with you.
Awesome. So we're just going to have a back and forth, if that's okay with you. I know people are really interested in what's happening in the markets, in particular with this huge run up in silver. Gold's also hanging in there. There's a lot of momentum in the market. So we'd love just to get your kind of candid take on how you see things progressing. Would you maybe like give us kind of just a general overview of kind of what you think's happening in the markets today?
Yeah, I think that the move up for silver is very significant. And I think maybe some people don't understand exactly how significant this move up is. Silver tested the $35 level after the 2011 blow off top 7 times, 4 times in 2011, twice in 2012, and once in 2024 before now finally breaking above it. And what we've historically seen, and I've spoken about it in a recent video, is when silver breaks above a key resistance level, a price resistance level, and starts moving up, what it does is it starts to move faster than gold. And this is something that, obviously myself and other people in the space have been warning people about. But the other thing is we also see an acceleration in the speed at which gold price starts to appreciate. And an example of that using some data is what happened in 2005 when silver broke above $8 an ounce. That was kind of a key resistance level for silver in 2005. And once it broke above, gold, which had gone up about 24% in the 20 months leading up to that breakout for silver, in very short order, I believe it was about 14 months, did another 34%, already from a higher base, which means in dollar terms, took gold up to a much higher level. And this is something that we should be marking as a significant event in this precious metals bull market, as a moment that we're probably going to see a very high likelihood, and I'm giving it a more than 80% chance of acceleration for both metals and possibly including, as you mentioned at the beginning of the video, a metal like platinum.
Yeah. Yeah, there's definitely something happening. There's no question about it. I did a little market forecast, actually shot a video yesterday. And, in the analysis work I was doing, I would not be surprised to see silver in the next, 6, 8, 9 months broach that $40 price. Like there's a lot of pressure right now in the market. And I don't think that whether it's via the COMEX or other markets around the world, I think the ability to hold metal prices down is becoming less and less. I literally just read this morning that China, it's been revealed, has actually been secretly purchasing gold in their central banks and not disclosing it. There's a lot of accumulation happening that we're not even aware of.
Yeah, and then you have to ask yourself, why are they doing that? And
Exactly.
I believe, you know, and this is my thought, that what they're concerned about is a repeat of 2008. And I don't want to call this the end of the US dollar because I think too many people have prematurely called for the end of the US dollar within the precious metal space. I think that the US dollar can devalue still infinitely more from here, which only reinforces the idea of why you need to own precious metals. That said, I do believe that these central banks are concerned that that can happen, that the global financial system itself isn't as secure as central banks and, for example, the US Treasury being led by Scott Besson right now want people to believe it is, and that beefing up on their assets, recalibrating their reserves, so moving away a little bit from the dollar and maybe, decreasing your reserves by 10, 15% of the US dollar and increasing them 10, 15% in gold is the move they're making right now in preparation for this. And I believe that it's really started in 2010, when central banks became net buyers of gold again. I'm kind of a broken record on that. I keep repeating that, but I do believe that was a major watershed moment for central banks and gold. But if we also look at the price action for gold since late 2023, I think this only confirms the urgency at which central banks are moving to recalibrate their reserves in favor of a hard liquid asset like gold.
Good. Okay, let's zero in on maybe a couple of, maybe 7, 8 questions or so on silver, because that seems to be where people are super focused right now. We keep hearing, and I know you've talked about how the supply demand is out of balance. They're not making as much silver or mining as much silver as the demand right now. Do you think as a regular investor, a regular stacker of silver per se, do you think they should worry about their ability to find silver in the retail markets going forward?
Maybe not necessarily in the immediate future. Now, there have been significant silver deficits for the last few years. And, you'll get varying opinions in the community about this. Some people saying, the supply of silver is not at all threatened, and some people saying that the imminent collapse of silver supply is right around the corner and that silver price is going to skyrocket as a result. I think that it's a consequence basically of two things. Number one, the deficits we're seeing in silver are real. Okay, over the past few years, especially with the rise of use in industrial use for silver, these deficits are 100% real. The only issue with respect to seeing that translate into higher price is silver is a byproduct of mining, very often copper mining. Here in Poland, where I live, one of the largest silver miners in the world, which is KGHM, actually is their main material that they mine is copper. So these companies are not necessarily aggressively seeking the best price for silver, and that is why we haven't seen that translate into higher prices. But back in 2021, I did a video when I first launched my channel showing some projections of how the supply and demand was going to squeeze very tightly in 2026. And my projection back then was that we could very likely see $60 silver in 2026, because this is a moment where the rubber is really going to start meeting the road, because inflationary pressures were going to be compounding on top of each other. This was going to, according to my assumptions, get people interested more in silver from the monetary side, and that is ultimately what's driving the price up today. And I think that thesis that I presented back in 2021 is playing out right now in the market. And I think that, as you mentioned a moment ago, we are going to see $40 silver in 2025. And I stick with that 2021 projection that we are going to see $60 silver in 2026, bringing us to a new US dollar all-time high. Not inflation adjusted. It's going to be a nominal all-time high, but it will be an all-time high nonetheless.
Yeah, when you were talking about the mines, I was reminding of that phrase we used. Oh, that's the silver lining, right? My understanding is that actually comes from the idea that when you mine gold or when you mine copper, it's often lined or benefited by silver. So
I had
it's
no
the
idea.
the silver lining, right? Kind of interesting, right? So
Let me add one thing to that, though. When it comes to people watching this video who are eager to continue stacking silver into this breakout, I mentioned on X a couple months ago that I do believe there might be some tightness in the retail market with respect to supply near the end of 2025. And the reason I said that was because the situation with tariffs were and still aren't fully resolved. Some people have oversimplified it, saying, no, 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 the tariffs don't apply at all to silver and gold bullion. Here's the law. Take a look at it. But what they don't realize is, and this is as, I'm speaking from the point of view of somebody who worked in a highly regulated business that often had to work with customs agents, is that each customs agent is different from the other. And what happens is when there's no clarity, 100% clarity on the rules of things coming in, they might try to apply tariffs incorrectly to products that might be considered bullion, understanding that they're collector products, and this is going to increase the lead time that it takes for gold and silver products being sourced from outside of the United States coming in for them to actually hit the market, which ultimately has an impact if that is tightened a little bit, the supply of those products is tightened a little bit on the premiums that people pay in the shops. So that's just a little bit of a warning, a red flag for people as we, enter the second half of 2025.
Yeah, well, I can tell you firsthand, it happened to us. We were bringing bullion from Europe, and we literally had a case in which there was a tariff charged to the silver. And of course, we're refuting that, but it does make you somewhat leery in terms of whether or not you're willing to then turn around and make that next purchase on behalf of your end user, right? So I guess it kind of leads to this next little question. So if we believe that there might be a tightening coming toward the end of the year, do we also then believe that premiums are likely to accelerate?
I would say that that is the case. I would say that the higher the price goes and the more excitement and momentum that builds around silver, and we know how the retail investor behaves. As price goes up, more people start to enter the market, right? So as more people start to enter the market, we're going to see, I think, a similar situation to what we saw during C19, where price started to appreciate significantly in very short order. Many people started entering the market. And even though there wasn't really a significant supply pinch, I mean, if you look at the production numbers, the US Mint produced more silver eagles in those years than, any of the previous 10 years before. Nonetheless, the premiums went up. And I think that set a bad precedent as well. And, for people watching this, what you don't understand is it's not the dealers like Summit that has the ultimate decision making power and what that premium is going to be. It is the people at the very front line that are supplying the market. Okay. And those people learned a lesson that the more people that are entering the market, the more mania there is around it, especially when there is some kind of concern about the fragility of the financial system, the more they can charge premium wise. And this is why leading into this breakout, I've been encouraging my viewers to remain persistent and not be complacent with respect to their purchases and keep buying before the breakout happens. Now the breakout has happened, right? Now we're actually going to start to see the premiums go up. We were spoiled not long ago. And in fact, I believe I said it on a video that I did with you for Summit Metals channel, where I said that the American people have been spoiled with respect to premiums on silver products and availability of silver products, because as silver went above the $30 level in 2024, a lot of people were coming into local coin shops, calling up the online dealers and selling their silver, whether it was just to get out of it because they were, fed up, or whether it was because they were trying to cover costs that were rising as a result of inflation. A lot of people were experiencing economic hardship. So I do think that was another catalyst of why people were trying to get out of silver. But those days are ending. Now that we've broken out above $35 an ounce, there is going to be more interest in silver. People are more and more concerned about the sustainability of US debt. This is going to drive interest and drive higher premiums. Again, from those first line people supplying the market, not necessarily the dealers that most retail customers incorrectly lay the blame to.
Yeah. So let's shift gears just a little bit. So we're talking about markets, and obviously the big market from a consumer standpoint is probably happening in things like ETFs and things like that. Now, we know that they're buying futures contracts. They're obviously not securing all that with physical metal because the future contracts far exceed the actual physical available. Does that give you concern? I mean, would you be concerned if these things start really tightening up, that the asset you think you're buying, like SLV, for example, the ETF, actually has nothing back behind it?
Well, the European Central Bank recently put out a statement on the gold market. I know it's not the silver market, but it's the gold market, about how the supply of gold can tighten so much that it actually is a risk to the financial system, because as these paper traders look to procure themselves to purchase physical gold in the open market, a lack of that gold can drive a rapid move in the price up as they compete against each other to get the physical gold to cover their paper contracts, very often shorts on metals. With silver, it is absolutely a concern. And I think that there are a couple things that the viewers need to take into consideration when choosing paper silver over physical silver, because at the end of the day, the paper situation doesn't bother me at all. I've selected in my approach to purchase physical silver, and here's a 10-ounce germanium mint bar. I love this bar. But but when it comes to that, a lot of people are going to find out that what they've actually purchased is a US dollar contract against the price of silver. And if we do see a rapid decline in the purchasing power of the US dollar, that contract is going to be settled in not, not the thing you think that you've purchased, but in the US dollar. Okay, which is, again, if it's rapidly devaluing, then you're out of luck. Now, the other thing that I want to warn people who are watching this video about is PSLV. A lot of people will tout PSLV as the greatest thing because they have the physical silver backing up all of the shares. And PSLV Sprott is pretty transparent about how much silver they're holding. The only issue is, and people tout PSLV as being convertible. Well, if something really happens in the financial system, it's okay because I have PSLV shares and I can convert that to silver. Well, a lot of those people, Eric, are going to be in for a very rude awakening, because what they don't know is that there's a minimum amount that you have to own in order to convert those shares into physical silver. And for the PSLV physical silver ETF, it's the equivalent of 10,000 ounces of silver.
Yeah.
So if you own more than 10,000 ounces of silver in the PSLV ETF, fine, convert that into the physical. You'll be fine. That said, if you don't, what you hold at the end of the day is exactly, like those other paper ETFs. It's just a paper promise that is going to be settled in US dollars.
Yeah. And good luck, by the way, when you choose to convert it, jumping through those hoops and finding out at the end of the day what you actually paid in premium on top of that. Because I
Especially
guarantee you,
if you
you're going to
live
get hit.
somewhere that's inconvenient for them to deliver.
Exactly, exactly. All right, so we have a lot of squeezes taking place. We have solar, we have what's happened just in base industry. I think one that's just starting to really emerge are all these data centers relative to AI. Like you literally can't turn on anything and not see something about DeepSeek, Chat GPT, Manus, on and on and on. Obviously, all of those chips, all of those things that require the fastest connection, the highest conductivity, are using silver. Do you feel like this demand for silver is going to maintain as we move forward?
Yeah, I think it's very sustainable. I do get questions from time to time if graphene can be used as a substitute for silver. And some people are convinced that graphene is going to be used as a substitute to silver very soon. And my only criticism there is I looked into some companies that were producing graphene, and I found two things. The first thing is that the process to produce graphene is very inconsistent, thus making it extremely expensive compared to silver. It would be extremely expensive even compared to 60, 70, $80 per ounce silver, by the way. The other thing is I found that a lot of these graphene companies have gone bankrupt. And I just think the entire business model is in question, where it's just much easier to
Yes.
fulfill it using physical silver. And as that demand is growing, as you've correctly mentioned, I think as things stand right now, that demand is not only sustainable, but I think it is going to continue to grow and exert more pressure on those supply deficits that we're seeing, which should again by next year start to translate into much higher prices for silver.
All right, now a favorite topic, the gold silver ratio. As you well are aware. So, not too long ago, we had it around 105, right? 105 ounces of silver for 1 ounce of gold. Now, we're down there around that 93 mark or so. Do you see that going lower? Do you see this as creating a trigger for people in the sense that if you feel like it's going lower, you should be stacking silver now?
It's coming down now, and now we're seeing it bounce a little bit. And that's
Mhm.
what's basically going to happen. It's going to come down a bit more, then bounce, then come down and bounce and come down. I do believe if we're looking at it on a longer term horizon, the gold to silver ratio is going to come down. Why do I say that? Because the gold to silver ratio is the number one indicator I use to signal the top of the metals market.
Mm.
And right now, with it still being above 90 and us really only in the early days of a breakout in silver price, there's a lot of room still for silver and gold price to go up. But as silver price goes up quicker than the gold price, the gold to silver ratio should then adjust. And once we see a significant crash in the gold to silver ratio, and we're going to know it when we see it. And right now, off the if somebody's watching this, what would that level be? Oh, maybe we start to consider that around 60. 45 maybe would be the bottom as far as I'm concerned. Maybe that's about as low as it can go. I know a lot of people will probably not like that answer because a lot of people think, well, it comes out of the ground at a ratio of 8 to 1. So that's what the value ratio should be, but I never confuse abundance of something with the value of something,
Yes.
especially with central banks really skewing the market towards gold as they really stock up and bid the price of gold up. That said, it will come down, and I am looking at that. I know it's a pretty wide range. I wish I had a better answer today, but maybe from about 45 to about 70 to be a range that kind of indicates, okay, we are getting close to at least the top of this metals market.
Yeah, I kind of think of it like salt water versus water. Water has a certain value. If I had more salt water, does it make my water less valuable? Not really.
It's a good
So
comparison.
the abundance issue kind of doesn't work for me either. It just seems kind of ridiculous. But I do think, and I can tell you from our side, from Summit Metals, we are definitely seeing more sales. People are definitely selling silver right now. We are seeing people convert. We've seen large orders, people turning in, for example, eagles, gold eagles, and buying silver. So it's kind of going both ways. Some people have been stacking for so long, they see this as, oh, this is my chance. I can finally get out, kind of like, lock in the price and convert it into fiat. Others are seeing it as an opportunity. Wow, I'm starting to see the GSR go down. I think it's going to go a lot lower. If that's the case, I'm going to convert right now and I'm going to start really stacking silver because I do think it's going to jump into that 40, 42, 43 price and higher and likely accelerate a lot faster than gold might do on a percentage basis. Would you kind of concur with that?
I mean, in theory, if you can secure in the right way a good trade for you that makes sense both from the tax angle as well as the premium angle, I would say, yeah, if we're at a gold to silver ratio today of 90 and we really bottom out around 45, if you've traded your gold for silver at 90 and then trade it back around 45, let's assume a little bit of, premium. I mean, the people facilitating these trades have a business to run. They have to make some money too. But you've
Yes.
almost, let's say, you've almost doubled your gold by making that trade. So is that a reasonable thing to do and try to play? In my opinion, absolutely. From my point of view, is it something that I'm doing? Because I want to be perfectly transparent with everybody watching this right now.
Yep.
It's not something that I'm doing.
I might say this. I'm doing it a little like you, maybe. I think you might agree with what I'm about to say, or you might say that's the way I'm thinking of it. Where let's say I had $2,000 to invest, where before I might have been putting the bulk of that toward gold, I might be putting a higher percentage of that now towards silver. It's not that I'm liquidating one against the other. It's just that I'm leveraging on one side more than the other. Does that?
And that's precisely it. And that's
Yes.
precisely it. I'm not looking at my age today to sell my precious metals anytime soon. So what I'm doing, following Gresham's law, is I'm using my bad money, which is the US dollar, to purchase good money. And I'm hoarding the good money, which is gold and silver. And depending on where that ratio is, that dictates how much gold versus silver I'm buying. And leading into this breakout, and you'll know this very well because we've discussed this, and I was even mentioning it in some YouTube videos. I was allocating more US dollars than I usually do towards buying silver because I saw the value there. And what I'm going to do is I'm going to continue to hold on to it. That said, I'm not interested in playing any trades because that's just the way I am. I'm hoarding good money for the long haul.
Yeah, exactly. Well, let's talk about another kind of, I think, an issue that's very, very real to many of our investors, and that's that, silver has a way of kind of giving everyone a gut punch. Just when you think you've reached the place where it's starting to really rock and roll, then all of a sudden, bam, you get hit by a decline. How would you advise like the average investor to kind of navigate the volatility that exists in silver? Like what would you do or what should they be thinking about in terms of their own acquisition strategy?
Well, I think it comes back to that dollar cost average strategy and kind of building on what we've just said. If you want to use the gold to silver ratio as an indicator of what you should be stacking more of at a particular time, I always say, and I've even written an article for Summit Metals on the website, and everybody watching can go and check that out. If the gold to silver ratio is above 80, that's a great time to use maybe a little bit more of your funds to stack silver a little more aggressively while you're still stacking gold. And when it goes below 70, maybe around 60 and below, then that's a time where you should be accumulating more gold. But when it comes to the gut punch that silver has a tendency of delivering, I think people need to simply manage their expectations. And the moment that you're really going to have to worry about that gut punch or any pullbacks, because pullbacks are inevitable. It doesn't matter what asset it is you're buying. It can be a stock, it can be a crypto, even. Pullbacks are inevitable. What you have to do is especially when you're buying silver, is understand the fact that it can pull back like a crypto, but it's never going to go to zero like many cryptos do, right? It's
Yeah.
always going to have value. And if we look historically, what's been happening, especially since 2006, when those first smart devices were introduced, and when Apple introduced the first iPhone, we have seen on an average basis the price of silver climbing over the long term. Sure, maybe silver got a little bit ahead of its skis in 2011, but that doesn't mean that if you had been dollar cost averaging regularly since then, that you haven't benefited. And I've shared numbers multiple times on my channel showing exactly how much that is and exactly how well silver has performed versus saving in cash, even at an annual compound rate of 5% per year.
And
Silver has
something,
beaten it.
yeah, and something you and I talked about is how incredibly uh, illustrative it is to see how had someone been buying, say, fractionally on a monthly basis versus saving up to buy that 1 ounce at the end of the year, they would have ended up dramatically ahead. I can tell you on our side, our program Auto Invest is doing great. And I love the fact that people are using it because it fits so perfectly in this dollar cost strategy. One thing I learned from Buffett, he'll find an asset that he likes and then he buys into it. This is where he's very different than the average investor. He actually, at that point, now that he knows he wants to own that asset, he actually is not only okay with it, he's happy if after that it goes down a little bit. Why? Because now he can even accumulate more at a lower price. And so if you believe in silver and you believe in gold, the volatility is measured in price. If you want something to go up, meaning it's has some form of volatility, you have to expect too that it's going to go down, right? So volatility, if you're looking for an asset to actually appreciate more dramatically than say something very basic, then you have to expect volatility. You have to almost have to encourage volatility because that's what's going to drive prices higher as we move down the path.
And Eric, you only have to believe in one thing to believe in gold and silver. And that one thing is that the value of whatever fiat currency it is you use, no matter where in the world you are watching this video from,
Exactly.
is
Exactly.
going to go down.
Yes.
And what we have seen since 1913, when the Federal Reserve was introduced in the United States, is that that has been a very consistent, long term trend that we've observed, and that it's only not only is it continuing, Eric, but it is accelerating. And
Yes.
that's why today, more than ever, people need to be positioning themselves in hard assets, which includes gold and silver.
I always feel like the dollar's getting hammered on both sides. You know, you've got debt, which obviously means you've got to print money. That's going to debase the currency or devalue. But on the other side, you look at say the S&P 500, right? Every company every quarter is on the gun to produce more. What's the easiest way to produce more? Raise your prices. That's by far the easiest way. It's literally a decision. And at that point, you're effectively debasing the dollar too, right? So you're kind of hitting it on both sides. I want to touch on one other little topic that I've been thinking about. I'd love to get your feedback on this. You know, we talk a lot about Bitcoin and kind of how, you know, because of the US debt, Bitcoin kind of makes sense. One of the things that concerns me relative to Bitcoin is you've got someone like Michael Saylor, right? He's now created all these derivative products, all these preferreds against Bitcoin. He's effectively taking, if you look at that as a currency, he's effectively taking that currency and he's layering a lot of debt against it, right? At some point, that thing, if for whatever reason Bitcoin goes the other direction, I think you could see a massive acceleration to the downside on that asset as a result of that debt. That in itself is something very different than what like a central bank does with gold. I don't think any central banks are borrowing money to buy gold, right? They're
No, they're not.
converting their currency into gold. Your
And
thought?
looking at it from a historic point of view, if you go into the United States history, into the early 20th century, there was a banking crisis. And and in this banking crisis was triggered by a couple people, couple individuals. I can't remember their names right now, who basically become so levered up in the system that they were buying a company with borrowed money, then borrowing money against that company they just purchased to buy another company, and repeating the process, repeating the process, repeating the process. And that's exactly what Michael Saylor is doing. Now, I own some Bitcoin. It is
As do I.
100% speculative, and
Yeah.
because Bitcoin can go to either zero or to $1 million, and whichever way it goes, it can go to zero. I won't care, but if it goes to 1 million, it will make a tangible difference in my life, and that's why I have it as a speculative position in my portfolio. But the only thing is, looking back at that history of that banking crisis in the early 20th century in the United States, Michael Saylor is really playing with fire because, history may not repeat, but it certainly rhymes. And he's so levered up that it could cause a complete collapse, not only of Bitcoin, but of all the other people who are financially involved with him and MicroStrategy, as well as the other companies that are getting on board and creating these kinds of
Treasury
uh,
accounts.
treasury accounts with the
Yes,
Bitcoin in it.
right. I mean, what you've described, by the way, is exactly what happened in the housing crisis. Exactly. People buy a home. Oh, wow, I can just go buy another home. It's going to go up in value. So I'll borrow against my primary residence. I'll go buy another home. Oh, wait, now I can borrow against that and I'll buy another one. And all of a sudden, the cards all fell down. And you've got a person standing there with six homes, of which he can't afford one. And now the whole market is getting crashed. That's exactly what happened in the housing market.
You've seen The Big Short. Remember when he's at the
Yes,
gentleman's club and he says, "You're talking about two mortgages on one house, right?"
right.
And she says to him, "I've got seven houses." you know?
Yes, exactly. Yeah, exactly. All right. Well, let me thank you so much. It's such a pleasure always to speak with you. I know our audience is just so encouraged by your thoughts and your perspectives, and we wish you the best and are excited to be engaged with you as we move forward in this great journey through gold and silver. So thank you so much, Bald Guy.
Thank you so much, Eric. And I just want to say what a pleasure it is knowing you, doing business with you, and that I encourage everybody who's following me and following my videos to make sure that, if you want to support what I'm doing, definitely reach out to Summit Metals. They've got great prices. That's a dealer that, in my opinion, you can trust. And Eric, thanks for everything that we get to do together.
Thank you so much. So yeah, please like and subscribe, and we'll look forward to seeing you on the next video. Thank you so much.